Hello everyone, welcome to Anuj Jindal. Welcome to RBI 247 session. Tell me if everything is fine with the audio and the video so that we can start with the session. Till then, good evening everyone. Good evening Niranjan. Hi Ishwari. Hi AK. Hi Shreya. Hi, good evening Afsana. Good evening Rahul. Good evening Abhishek. Okay. Quickly confirm that everything is fine with the audio. You can see the screen. Everything is fine. Good evening Harsh. Good evening Karan. Okay, thank you. Okay, good evening, Arpan. Great. I think we can start with the session. So today in our session, we have four news. Okay, let's focus on the news first. So what these news are all about. So basically this is a amendment that has been done by the RBI in this framework. So we are going to understand what is this amendment and what they exactly do, what they exactly have done. So what is this framework? We are also going to understand a little bit about this framework as well. Then we have this, we can say again amendment. Both the amendments are related to each other. Both the amendments are related to each other and quite same as well. So we are going to understand what exactly is the difference between the both. And then we have this news again with the RBI. This is related to the firms portal and the reporting. Okay, so we are going to understand what exactly is the reporting, who is reporting, and why is reporting required in this case. Then we have this, which is SEBI's news. SEBI have launched a campaign that is Niveshak Shivir. We are going to understand what is this campaign and what are the key features of such campaign. Okay, so let's just start with the first news, which is large exposure framework. Let's just get the terminology first. So basically what happens that banks are the one who gives loans to various kind of entities, to various kind of individuals as well. And sometime what happens that these banks gives huge, or we can say big loans. Okay, they provide big loans to such individuals and companies, and such huge, or we can say big loans attract what greater amount of risk for the financial stability of such bank. What if this big loan default? Okay, what if this individual or this company is not able to pay such huge amount that is being taken from the bank as a loan? So there is a lot of risk that is involved, or we can say the bank have a large exposure. Yes, we can say that bank have a large exposure towards this kind of individual and companies. And that is the reason RBI released one large exposure framework. In this framework, RBI set some limit, saying that you can give this amount of, or we can say this percentage of loan to individuals whenever you are having large exposure. You can give this percentage of loan, which is a limit that is being set by the RBI to entities which are having large exposure. Okay, I hope the overview of the framework is clear. Okay, so what RBI has done, RBI have amended one regulation related to this. Before we directly get into the direction, we need to understand few things. Okay, first we will talk about that and then we will come to the amendment. See, what is the definition of large exposure? How can we detect or how can we identify that this kind of loan is a large exposure? So what RBI says? RBI says when 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 a bank gave a loan more than 10% of the tier 1 capital, then it's a large exposure. Okay, so there is a limit. I told you earlier that there is a limit. What are these limits? Whenever they are giving loan to a single borrower, that is individual, then in that case 20% maximum is 20% of the tier 1 capital is the, ignore this, 20% of the tier 1 capital is the limit as per the RBI. And in case of group of connected counterparties, suppose there are companies which are some or the other way indirectly are connected to each other, so they are counting them as one. Okay, in that case the limit is maximum of 25% of the tier 1 capital. So these are the limits as per the RBI's framework of large exposure framework. Okay, let's come to the another point of this regulation. So what happens that banks are the one who, what they do, that they give loans to the various kind of sectors such as agriculture sector, MSME sector, housing sector, education sector as a part of their priority sector lending, because these are the sectors of the economy wherein there is lack of credit availability. That is the reason, as per the RBI, they are required to invest, or we can say give some loans to such priority sectors. Okay. Now what in case there is a shortfall? That means what if the bank is not able to give full-fledged loan? Suppose there is a few percentage of loan that must be provided to the priority sector lending, right? Suppose there is a 75% of loan that must be provided to such sectors, but they were only able to provide only 50% out of that. So 25% is a shortfall. It's a shortfall. So whatever money is a shortfall, they have to invest it in other, we can say, entities. These are like NABARD, NHB, SIDBI, Mudra, and so on and so forth. They can invest in such entities which will indirectly lend to these sectors, that is MSME, agriculture, export and import, so on and so forth. Okay, so this is how things work. Now what happened? What happened that whatever money was transferred by bank to NABARD was not counted towards the large exposure limit. Why? Because whatever money that is being transferred to the NABARD, it is for the agriculture sector. It is not a commercial loan, right? The bank is providing it as per the regulatory requirement of the RBI. So no profitability, or we can say the hidden profits are there. So it is not a commercial loan. So whatever money bank used to transfer in case of shortfall to NABARD was not counted towards the large exposure framework, because there is some limit. So उस limit को maintain करना पड़ेगा. इसलिए उन्होंने क्या कहा कि जो भी आप NABARD के में पास पैसे डाल रहे हो PSL के अंडर, we will not count it towards LEF. but अगर वो NHB में कर रहे थे, पेमेंट कर रहे थे, या फिर SIDBI में पेमेंट कर रहे थे, या फिर मुद्रा में पेमेंट कर रहे थे, in that case they were counting these kind of payments against LEF. उससे क्या हो रहा था, उनकी जो कैपेबिलिटी थी लेंड करने की टू अदर सिंगल बोरोवर्स और टू एंटिटीज, दैट वाज लिमिटेड. ओके, उनके पास बहुत लिमिटेड रूम बच जाता था to give loans to those borrowers, because whatever money banks were transferring to these entities were counting towards the liquidity quantity, counting towards the large exposure framework, है ना. तो पहले जो एग्जेम्पशन था वो सिर्फ किसके पास था, NABARD के पास था. नाउ दैट एग्जेम्पशन हैज बीन एक्सटेंडेड. अब किस किस को इंक्लूड कर लिया, अब NHB, SIDBI, मुद्रा, इन तीनों को इंक्लूड कर लिया है, और भी जो RBI स्पेसिफाइड एंटिटीज हैं उनको भी इंक्लूड कर लिया है. दैट मीन्स वट एवर मनी दैट बैंक्स विल ट्रांसफर फ्रॉम नाउ ऑनवर्ड्स टू दीज एंटिटीज विल नॉट काउंट टूवर्ड्स द LEF framework of the RBI. ठीक है, कौन कौन है, NHB, SIDBI, मुद्रा and any other RBI specified entities which are going to come in future. Okay, this is the change. So earlier what was the rule, that deposit that are kept with the NABARD for the shortfall in the PSL exempted from the large exposure framework, but now it has been extended. Okay, so all these entities are excluded from the large exposure calculation. Okay, because these are not commercial loans, these are regulatory requirements. एक बारी पढ़ लेते हैं यहाँ से भी. So what was the news, that recently RBI expanded the list of exemptions under large exposure framework to include bank contributions to NHB, SIDBI, Mudra and other specified entities in case of shortfall in the PSL. और ये रेगुलेशंस किस पर अप्लाई होती हैं, टू ऑल शेड्यूल्ड कमर्शियल बैंक्स बट एक्सक्लूडिंग RRBs. Now the whatever amendments have been made, they are immediately effective in nature. Here we are with the second news, which is somewhat similar to the what we have discussed earlier. So basically RBI relief to UCBs on PSL deposits. Again यहाँ पर भी किसकी बात हो रही है? PSLs की बात हो रही है. Again UCBs, what they do, that they are also required to invest in some priority sector, right, as per the RBI regulations, and whatever money they are transferring to entities like NABARD, NHB, SIDB are not going to be a part of large exposure framework. ठीक है, वही सेम रेगुलेशन है, वही सेम रेगुलेशन है व्हाट वी डिस्कस फॉर द शेड्यूल कमर्शियल बैंक्स, और यूसीबीज के लिए भी सेम रेगुलेशंस है कि वट एवर यू आर मनी ट्रांसफरिंग टू सच प्रायोरिटी सेक्टर्स, in case of shortfall we will not count them towards the LEF. ठीक है, so have a look here as well. So in case UCB fail to meet the PSL target, they deposit shortfall with the NABARD, NHB, SIDB, Mudra, and such contribution will be now exempted from the exposure limit. ठीक है, exposure limit से exempt किया जाएगा. Generally, what are the exposure limit for the UCBs? 15% of the tier 1 capital for single borrower and 25% in case of group of connected borrowers. What is the change here? UCBs के लिए अलग से नोटिफिकेशन क्यों निकाली है इन्होंने? Because there is a change, there is a little bit difference. क्या difference है? That risk weight has to be maintained by the RBI in this, by the UCBs in this case. They are saying that 100% of the risk weight you have to maintain for whatever you are giving to NABARD, whatever you are giving to NHB, whatever you are giving to any other entity for the shortfall in the PSL, because they are identifying them as all other asset, and whatever asset, what is the asset for the bank? Whatever loans they are providing, right? So they are saying that these kind of loans that are being given through NABARD, NHB, SIDB are being identified as all other assets for the UCBs only, and that is the reason that they have to create a provisioning of 100%. That means risk weight of 100% is being assigned for such other loans, other assets. Okay, so bank must hold a full capital in order to make it fully risk free. Okay, this ensures that UCB hold enough sufficient capital for these deposits even if they are regulatory in nature. Here we are with the third news, which is reporting on the firms portal. Now what is firms portal? Firms portal is foreign investor reporting and management system. What is this portal? This portal was introduced by RBI in 2018, and what was the agenda? Agenda was that helping RBI to know how many investments are coming in Indian entities from foreign investors. So Indian entities are going to report whatever investments are coming from the foreign investors through this portal. So there are various kind of list of, we can say, forms that are available on the portal, through this portal, and what kind of investment that you are getting from the investors. You are going to fill that form and you will inform RBI regarding such foreign investment. Okay, so this is the portal is all about. So what has happened? So 2024, in 2024 we are going to first read the background. They are saying in 2024 there was some amendment in the FEMIA regulation, जहां पर उन्होंने क्या किया था, that they allowed foreign investor to participate in such derivatives like AIFs, REITs and InvITs, wherein they are issued partly paid units. होता क्या है? देखिए, REITs, InvITs, these are what? These are alternative investment funds and derivatives. What has happened? That these kind of units are being issued to individuals as a share. Okay, अब होता क्या है? That sometime these units are being issued as partly paid. That means the investor can pay some amount in upfront, and then later the remaining amount can be paid later on. But there was a lot of risk when we offered these kind of units to the foreign investors. But then RBI says that we need to open up various types of grounds of investment for such foreign investors, and we must offer partly paid units to the foreign investors as well. So in 2024, they allowed partly paid units investment by the foreign investors. Okay, so this is all the case was. But this was confusing. Why? Because how they are going to report such things, this was quite, we can say, it was not clear. It was not clear enough. So that is the reason today, that is now, RBI issued the circular explaining how and when these transactions must be reported to the RBI through this firm portal. So these directions are effective immediately, and how they have issued the directions under section 10 and 11 of the FEMA regulations are in addition to any other required legal approvals. So why they have issued it? Because there was no clear rules about whether the partly paid unit could be used to the foreign investors and how such issuance must be reported to the RBI. So that is the reason that they have issued it. So how they are going to report it? For the issuance that has been done after May 21, 2024. उसके लिए कब करेंगे? Within 30 days using form INVI. INVI is for INVITs and REITs में जितनी भी इन्वेस्टमेंट हो रही है उसके लिए यू हैव टू यूज दिस फॉर्म INVI with RBI within 30 days. In case these are old issuance, May 21, 2024 से पहले इशू किए गए हैं, then you have 180 days with you. 180 days from the day May 21, 2024. And no late fees will be there if reporting is being done in the prescribed period. So RBI is giving one-time relaxation under these two Indian entities. Because Indian entities are the one who are going to report on this portal. So what is the role of the bank in this case? So the banks, that is the AD1 category banks, are going to inform the clients and the customer about the update. They are going to ensure that they have to update all the Indian entities that are there in the financial market. They must inform all the things well in advance. So I have put some information regarding the firm's portal here. So first, you have to remember the full form of the firm's portal. When it was issued, or we can say introduced, launched in June 7, 2018 by the RBI. What was the agenda? To facilitate reporting of the foreign investor by the Indian entities under FEMA regulation 1999, and this portal is managed by Foreign Exchange Department of the RBI, and the portal covers different types of foreign investment and their respective forms, so that Indian entities can fill that form in order to inform the RBI. So why this portal was issued? Again, because there was a lot of physical paperwork that was involved while informing things to the RBI. So this led to delays, errors, and incomplete data and the compliance issue. That is the reason that they made one online portal wherein all things can be provided to the RBI on real-time basis. Here we are with the fourth news, which says SEBI and MCA launched Niveshak Shivir. So this is a campaign. Or we can say it is a program that is being launched by SEBI with the help of MCA. That is Investor Education Protection Fund, which is under whom? Which is under MCA. Okay. So what happened that they have done that whatever unclaimed funds or shares are there in the financial market, they are going to make it easy for the investors or the people, claimants, to reach out to companies or to the IEPFA, that is Investor Education and Protection Fund Authority, to claim their funds. What these individuals used to do, that first, there is a lot of negligibility among these people, that they don't want to go towards these kind of fund authority. Why? Because there is a lot of paperwork that is being involved here. First. Second is that they do not want to get into this cumbersome process, and they are very much not aware about this process as well. And the third thing is that they used to meet third party agents. They used to meet third party agents that used to charge heavy fees, high fees for the same. And now SEBI is the one who is providing such campaigns so that it simplifies the process of recovering the unclaimed investors assets, whatever there are. These are shares or funds, कुछ भी हो सकता है. So this will enhance the financial literacy. हम investor education provide कर रहे हैं to the investors so that उन्हें end to end solution मिल सके that why and how they can process their unclaimed funds. Unclaimed funds और shares कब होते हैं? When they are not being claimed for more than 7 years, for 7 consecutive years, and then they are being transferred to such fund. Okay, this also will reduce the reliance on the intermediaries. I told you that third party agents से मिलकर they used to pay high amount of fees for the same, but अब क्योंकि intermediaries हट जाएंगी, because SEBI is trying to make it very much clear to the investors and the claimants कि आप कैसे claim कर सकते हैं. Okay, what is the name of the campaign? That is Niveshak Shivir, which is a campaign. This will help investor reclaim the dividends and the shares. What are the features of such campaign? It is a help desk. That means it is going to help the investor directly to interact with the company representative, registrars and transfer agents. They can directly talk to these individuals, these personals, in order to get to know about their investments and shares. This campaign give end-to-end assistance to the individuals. This complete guidance for the entire reclaim process. So whatever is the process to reclaim it, they are going to make it very much clear to the individual. So this is for both for the shares and the dividend. So no intermediary would be required, because they are the one who are going to set up physical campaigns over different places, right? And that is firstly in Mumbai and Ahmedabad. So they are trying it first in the Mumbai and Ahmedabad, then they will expand it to various other places as well. Investor education is the main agenda of this campaign, that we are trying to educate the investors. Provide one-stop solution for all the claims related and KYC related issue. So they can also provide them KYC related information, and they can also update the same through these campaigns as well. Okay, here we are with the questions, which of the following contributions are now exempt from the large exposure framework exposure limits as per the RBI's June 2025 amendment? Here are the options: deposits with the SIDBI, contribution to Mudra due to PSL shortage, C, deposits with RBI under reverse repo, contribution to NHB due to PSL shortfall. So what is the right answer? Right, everyone. So C is the right answer. A, B and D is the right answer. Reverse repo rate is not there in the news. As per the RBI's 2025 clarification for UCBs, which of the following is true regarding the contribution towards NABARD, NHB, SIDBI, Mudra for PSL shortfall? What is the answer for the second one? Okay, right. सेकंड का ए ठीक है. अगर मैं आपसे पूछूं व्हाट इज द रिस्क वेट दैट हैज टू बी मेंटेन्ड फॉर सच कंट्रीब्यूशन टू नबार्ड, एनएचबी, सिडबी, तब क्या होगा इसका आंसर? अगर रिस्क वेट मेंटेन करना हो फॉर द सेम, व्हाट इज द राइट रिस्क वेट? व्हाट परसेंटेज ऑफ रिस्क वेट इज रिक्वायर्ड? अभी तक सिर्फ युक्ति का आंसर आया, दैट इज 100%. राइट युक्ति? गुड गुड. अगर ये क्वेश्चन आएगा देन यू हैव टू आंसर 100%. Good. Good, Shubham. Good, Rahul. Great. Okay. In 2025, SEBI and the MCA launched a new initiative. Which of the following initiative was jointly launched by SEBI and the Investor Education Protection Fund to assist the investors in recovering the unclaimed dividend and shares? So what is the name of the campaign? Right, B. और क्या पूछा जा सकता है इसमें, दैट अभी कौन सी प्लेसेस पर दे आर ट्राइंग टू लोकेट. ठीक है, तो वो कौन कौन सी प्लेसेस हैं? मुंबई एंड अहमदाबाद इन दिस केस. ठीक है. Here we are with question number 4. Recently, RBI issued a circular to allow investment vehicles to issue partly paid units to foreign investors and to explain how and when these transactions must be reported to the RBI. According to RBI May 2024 circular, investment vehicles issuing partly paid units to foreign investor must file Form in V on the firm's portal within dash days for the new issuance and dash days for the older issuance. So fill in the blanks for the correct answer. Right. C is the right answer. That is 30 days for the new issuance and 180 days for the older issuance. Okay. Here we are done with the session today. So here I would like to tell you that we are offering 6 months course at a discount. You can get that discount using this code, that is achiever code. And if you are planning to take one course and you are trying to go for a 6-month course and you want to give examination within 6 months, okay, so you can go with this. Okay, and also you can also go for past year papers. You can buy these books that are being provided by us. You can get these from Amazon or Flipkart. We have 2 books. One is for phase 1 and phase 2. Okay, I hope you have liked the session. In case you have any doubt, please comment in the comment section below. I'll take that and I'll reply it as soon as possible. Okay, so best of luck. Keep on revising for the finance current affairs. Goodbye, everyone.